Welcome to another GoldSeek.com Market Nugget. This week's special guest, Jim Sinclair from JS Mindset. Now that gold is blasted through that 4-digit point, it's a pleasure to welcome back a man who knows more about gold bulls than a wealthy cattle rancher. JSMindset.com's Jim Sinclair. Welcome back, Jim.
Well, thank you.
Talking to Anna in your office, and she says she's hesitant to take a ride in that amazing aquatic automobile of yours. Have you been on the water lately, Captain Sinclair?
Oh, absolutely. I was out on the lake 2 weekends ago. My dog was with me, who now refuses to go. And in fact, I ended up not only on the lake, but in the lake. Basically, it wasn't too bad. I had to bring the thing into the dock because the engine failed, and I thought the water was about 1.5 feet deep, so I leaped over the side to find out it wasn't. Up here on the East Coast in the fall, that lake can be real cold. A 1992 Ford Fiesta that floats. I don't think you should be too envious.
It still sounds like a lot of fun. The last time we talked a few months back, we were both convinced that gold was gearing up for a break above that 1,000 concrete ceiling, if you will. And at the time, we lacked a lot of support in that viewpoint. Why do you think so many folks missed the boat there?
I think they read the commitment of traders and commercials versus specs. You know, it is extraordinarily accurate only when your major gold banks are dealing against the average speculators. And twice in the 70s, they got on the wrong side rather badly, meaning the commercial traders were actually on the wrong side. And both of those times is when they took on governments. Once in the early 70s when the French took a very serious interest, and of course towards the end of the period when the Saudis were very interested and very active in the gold market. We had China come in, when since then we've seen that other central banks, India and some smaller central banks, are active in the gold market, and it happened again. In other words, when you have a state, you're not going to have the Federal Reserve declaring a gold war against another nation. It's too counterproductive. So cock goes wrong when they take on countries. They go right when they take on the speculators. And at this time around, it seems that rather than being a exogenous event that slips in from nowhere, there is, because the diversification of reserves amongst central banks, a defined and apparently continuing interest for other central banks from small to quite considerable in the gold market. So what you've got is an underpinning of demand which is very, very healthy for a market that's heavily shorted by commercial interest.
You know, Jim, if I read between the lines there, it sounds to me as though you might be privy to some knowledge regarding this short squeeze that we're hearing rumors of in the gold market.
There's the obvious, which is the reported commitment of traders. There's the misunderstanding. Much of that has to do with how metals dealers work by, say, purchasing from the mining entity and shorting against that. The short position tends to be almost on a constant basis because of the methods of a metal dealer considerably overstated. But it is short on balance. And in that sense, yes, obviously there's a short squeeze taking place. I think more importantly, you need to take a look towards the coin market and the shortage now of the Kruger Rand. And the fact that the various issues of coins seem to be being taken off the market where mints aren't able to keep up with it. Now, that's going to shift demand towards the futures market, where people who would buy more than 100 coins will begin taking delivery of bars. That's, I think, the most important element in the argument of a short interest is the shift to the physical and the use of the futures exchange as an efficient pricing mechanism for taking delivery.
Rumors continue to circulate that China's central bank governor might remove the dollar peg and allow the yuan to appreciate. If the Chinese currency is allowed to trade freely, how will this affect the dollar and gold markets?
First, let me tell you, I rather doubt it's going to happen. But let's say it does. So why don't we just take that argument and walk through it? Importing a great deal of products from China and not being able to make an immediate change, not having manufacturing facilities elsewhere, price of those products rise in terms of a currency is an inflationary impact. And I think that needs to be taken into consideration. The Chinese are not, you can see the great result they had or that the U.S. had or the G20 had. The Chinese are going to run their financial affairs exactly as they please in the best interest of China. And that removal of a dollar peg at this point in time or a free-floating internal currency while you have the external currency and much less supply is simply an oxymoron. So in time, yes, I'm sure. But that in time will be well after this gold market has established its high price.
In the past week or so, Chinese officials finally allowed for public ownership of silver, AG, for the first time since the communist regime came into power. And with over 1 billion citizens and a national penchant for industriousness, could silver become the everyday person's gold in Asia? And what would this mean for both gold and silver?
Well, you could see that in the gold-silver ratio, okay? That's a pivot point, and most likely based on the assumption, a positive assumption of the equation that you just set up. There's every possibility that that could happen. But silver is industrial as well as precious. And silver is monetary, but it suffers from a very serious problem. That is that if it's not contained within a piece of paper, it's too heavy to bring to buy your car. Silver as money is an argument which is reasonable but not overtly strong. Gold as money is universal and historical. I would tend to think that, yes, of course, anytime you establish the ability for more people to own a given item where there is, in fact, a good rationale for demand, is going to increase its price. So I would tend to think that it would probably shift that gold-silver ratio and favor silver for a while, which has been lagging.